So, instead of uploading my chart analysis behind my trade ideas, which is what I normally do if time allows, I decided that it's probably easier if I create a video where I explain my thought process. It's probably easier for you and me. So I'm going to walk you through, well, firstly, the trade idea about NASDAQ, and then, of course, because we also took another trade on gold, I'll walk you through both. Why I created a setup the way I did. Now, on Friday, just after the big event, which was the NFP data release, by simply taking the two trades, which I shared in a very timely fashion here, I hope you appreciate that, because it was just impossible for me to do all the drawing, all the manual work of typing my messages and upload them all and do my usual updates. It was impossible to do so much within 1 second. So I simply passed along my little setup here so that you guys get to see it and execute it immediately. Going back to the chart here, I want to do a little replay here to dissect the psychology behind it, what could have happened potentially, and what actually did happen if you followed my trades. So by simply taking the two trades of mine, how many pips did we bag in total? So I suggested right here that we exit, close all of our trades, and then move on about our day. That's 163 pips. And on gold, because I suggested that we close our position on gold at 52. See right here? How many pips did we bag on gold? Let's see. 150. So 150 to 164. That's over 310 pips within 20 to 30 minutes, if you borrowed my trade ideas, that is. But of course, I'm never offended or never upset. I'm never bothered if you didn't like my ideas or simply didn't think that my trade ideas were ever going to work out for you. That's completely fine. So yeah, by simply taking the two trades that I created, you bagged over 310 pips within 20 to 30 minutes. Instead of sitting there, remember that we had Fed speeches around these hours, so you simply bagged 310 pips within 20 to 30 minutes and then go on about your day. Maybe you have your kids, you have your family members, you have animals that you've got to take care of. You're freeing up your mental capital, you're freeing up your time, you're freeing up your energy for other more important things outside trading. Instead of sitting there betting on the directionality of Fed speeches and wondering what that's going to do to the price action and the market, and just sit there for hours till it hits TP2, hopefully, hoping, just like betting is not trading. And also, if let's say that you actually moved your stop loss to break even, you would have been stopped out here and ended up with nothing at all. After all that mental effort and anxiety and sitting around and waiting, you would have ended up with nothing here. So this is exactly what I've wanted to encourage everyone to start doing. You've got to think more wisely about how you allocate your time, because you're not a machine. You're only human. And which one would you prefer in terms of managing your mental health, your emotions around trading? Would you prefer capturing 310 pips within 20 to 30 minutes and then move on about your day? Or do you think it's wiser to just sit there with all that anxiety and speculating what the Fed speeches are going to do to your price action, to your trade, and then potentially hold the trade for maybe a couple of days, pay the swaps, only to have the trade end up in nothing, or less than 300 pips, or less than 50 pips? You don't know, right? So let's do a little replay here. So even if you did end up having this trade go along in your favor. Let's replay. Okay. So it did turn out to be in your favor, even though there was evidence that this is obviously a footprint of institutional manipulation here that actually distorted the price. Had it pull back a little here and hit a lot of people's break-even point or entry, or maybe somebody set their stop loss just here, they would have been stopped out and copped some losses. But even if you had all the patience and time in the world and actually ended up sitting in front of your computer for literally hours after the speeches concluded, what was that going to do for you? How many pips would you have bagged? Just below 300 pips. And obviously, you know, if you were to hold a long trade, a swing position for risk management, you probably wouldn't have taken the other trade on gold, because that would have only amplified your risk exposure. So you probably would have just held that one trade only if it was going to be a swing position. Going into the technical analysis behind my trade ideas. So I'm going to explain very quickly why I set it up the way I did for both NASDAQ and gold. And of course, I'm going to upload the same charts just concluding this video. So if we turn to the 4-hourly chart, okay, let's go to 4-hourly price action for NASDAQ. So what we have identified is a falling channel. And within this falling channel, we can see that more than 50% of the time, price actually rotates in the upper half of the channel. And because it's a falling channel, plus over this period of time, we didn't exactly have price spending any time below this critical level. You're not going to be able to see there with all my labeling, but this critical level right over here was rejected. We had a sharp rejection here as well. We had another rejection here. And on Friday, if we go back into the 15-minute chart, price did not even touch this level at all. So this is a confluence. We have every reason to believe that we're facing a confluence here, this zone, this area marked by this rectangular shape. This is your confluence. And your macro bias is far more likely to be bullish than bearish. Plus, as soon as the NFP came out, I did not place the trade, by the way, before the NFP data, because that would have been considered a gamble. And I cannot stress this enough. Gambling or betting is not trading. So I waited just after the NFP data release. And at the first sign of bias reversal confirmation, I placed my trade. And then I gave everyone the tip, didn't I? The line here is just my personal projection. I didn't move this after the trade, and I definitely did not move this after the NFP data release. Jumping into gold. We probably have a little bit more information here about gold. So again, I will be uploading this chart as well just after I conclude the video. But we can see that the sell side liquidity has been swept here. We had a Judas swing. And we had a break of market structure right here with this power candle. And then gold has been exhibiting order block. So this is where potentially you could have entered You could have grabbed some optimal entries for your intraday buy or swing buy. And then when you consider how to set your TP, you're obviously looking at the buy side liquidity either here or somewhere here or here. That's probably a little too ambitious for you, but if you're just holding a swing buy and you have strong conviction that gold macro bias is definitely very, very bullish, and it's going to potentially penetrate the upper limit of the ascending channel, then of course you're welcome to hold it for a very long time, as long as you don't mind paying the swaps every single night. That's completely fine. In fact, I probably would have held that trade open because I have enough money, I have enough capital to actually keep it open. It doesn't bother me. But I don't like anxiety, and I don't like waiting for days to close a trade, because in my opinion, just for my personal preference, I'd rather have liquidity. I'd rather have all that capital and the mental capital as well, and the flexibility to always be able to enter a strong trade. Because every single day, if not every second day, there are always high quality opportunities to be found, depending on how you see it, right? So I'd rather just free up my mental capital, free up the actual capital in my trading account, and then move on to the next strong opportunity, instead of keeping something open, which may actually reverse, by the way. The Fed speeches could actually do damage to the gold market. In the hindsight, of course, everything worked out in our favor, and TP2 was actually hit for swing traders even. But at the time, especially when you're looking at these power moves down, how would you have known if that was manipulation or that was actually following the impact of Fed speeches? You wouldn't have known, right? So for your health, for your mental health, and the health of your account, it was better to just seize the day, move on, go on about your day. So this is what I definitely would like to encourage everyone to start doing, to start thinking about how you allocate your time, how to actually take care of your mind so that it gets enough rest, and then by the time you start trading the next day, you're sharp. You see the market, instead of feeling so restless and fatigued because you already exhausted a lot of patience, you exhausted a lot of mental power the day prior by watching the market for literally 4 to 5 hours. I don't want you to ever do that, because a lot of you would have understood this by now. 80% and 90% of trading is really all in the mind. It's about your control over your emotions, your psychology. If you wake up one day with all that fatigue and anxiety, you're probably not going to trade very well. This is all very self-explanatory. I think I have made my charts very simplified. I have always labeled my charts, my channels, my inner support or inner ceiling or inner floor. I've always made sure that I label everything clearly so that you understand what's going on there. In simple terms, I wanted to keep everything simple so that you interpret it very quickly as well. And once again, this dashed line here is really just my projection before the NFP data. I have not touched it ever since. Have a look at the two charts, and if you have any questions, there's always the general section, so you can always go into the general chat and type in your questions. If you have any feedback, or you want to socialize with other traders within this community, you're always welcome to use the general channel. And once again, I would encourage as many of you as possible to take the quizzes, because all of my quizzes actually simulate real situations, real stress situations where you might be running a very huge loss, and you could be facing a swing trade and you don't know what to do, particularly in relation to a client request or withdrawal. All of the quizzes actually simulate real life situation where you know that you're going to have to cop this kind of situation over and over again. And that's why I encourage you to take these quizzes and really think about how you can actually apply similar or same strategy to your real trades later down the track. So that's all from me. I'll see you in the next trade.